Hi everyone, welcome to our, again, People We Trust. We always like to reach out to Justin. This is Justin Sauve. He is with Mortgage Corp Financial Services. We always call it Mortgage Corp, so the whole name.
Short form's fine.
I don't know what to say. But whenever we have questions about mortgages or we have clients that do, we know that we can call up Justin and he will be there to answer our questions. So one of the questions that we often get is what's the difference between a pre-qualified before you go out for your budget to look for your house and pre-approval. So that's why we have Justin here to answer that question for us.
Yeah, thanks Tash. So there are very big differences, especially within our industry. The terms are passed along numerous different ways, but there is a very big differences. So a pre-approval oftentimes is done very quickly. It's a simple gauge based on income versus debt load. So whether you're going to your bank or doing a pre-approval online, they're judging what your income is based on your debt load, and they're qualifying you based on that amount. So they're giving you a specific amount based on your income and your debts. A pre-qualification is a lot different. It's a very detailed process. So the same as a pre-approval, we are gauging income to debt ratio. At the same time, we're also retrieving a credit report, which is very important to know that the client's going to qualify based on their credit score.
Right.
We also collect supporting documentation. So that would include income documentation. We're collecting T4s, pay stubs, letters of employment. We're confirming assets, and we're also confirming source of down payment. This is done at the initial meeting. The reason why we do a pre-qualification is we want to make sure these borrowers don't have issues when they are ready to buy a house. Unlike a pre-approval, oftentimes there's no credit report retrieved. They're not qualifying income, so there could be surprises when the client's ready to buy that house. So by doing a pre-qualification, we're eliminating all of those unknowns, I guess you can say, that could pop up when the clients have saw 15 houses and all of a sudden they found their dream home and they don't qualify.
Exactly.
So there's a big difference. We recommend all of our buyers get pre-qualified, whether it's with a mortgage broker, your bank. Do a full pre-qualification to save those surprises when they're going to buy their house.
Absolutely, and you know, when you're working with us, we like to get everything done up front so that we try and limit any of those surprises that we run into, because it's disheartening when you get to that point where you found that house, you put in that offer, we went through all that work, and then perhaps something happens at the end of it. So thank you, Justin, for explaining that. So now we know the difference between getting pre-qualified and getting pre-approved. So two terms that don't mean the same thing. They are two different things. So always ask which one either your mortgage broker or your bank has performed for you. And again, just that little bit more of information going out there when you're house hunting. Now, we've all heard that CMHC, correct?
Yes.
Is going to be maybe rolling out some changes and some programs that aren't out yet, but we thought Justin would touch on those for you, because if you're seeing them on social media and you're seeing the articles, you get a little bit better idea of kind of what is maybe coming our way.
Yeah, so there is some changes happening with CMHC, Canada Mortgage and Housing. They're really going after these first-time home buyers to try and assist these first-time home buyers. So RSP limit with withdrawal limits have been increased. Instead of $25,000, looks like it's going to be going to $35,000 per first-time home buyer. So that means if you're using your RSP for down payment, you can withdraw up to $35,000 without paying income tax on that. And I think they give you about 15 years to pay that money back without being subject to income tax. Another product they're coming out with, which is still new, we haven't heard. Our industry has been lobbying to get more information on this. It's still not available yet, but they're looking what they call an equity assist program. So first-time home buyers buying a property under $500,000, CMHC will match their 5% down with an additional 5% down. Again, it's new, it's been announced, there's no dates yet, but that is coming, and when it does come, believe me, I'll be back, Tash, to explain that in full detail.
Absolutely. So that's what we just want to give you that information so that you have it when you're going out there, you feel confident when we take you out house hunting. So thank you, Justin, for being here with us.
Yeah,
I'm going to put his information at the end of the video, so if you want to reach out and have any of your questions answered, they're happy to sit down with you and go through, and even if it's not for a new house, maybe it's for your current house too, just to look and see where you're at. So thank you everyone for tuning in. It's Natasha Laframboise, sales representative with the Laframboise team, and
Justin Sauve, mortgage agent, Mortgage Corp Financial Services.
Mortgage Corp Financial Services.
Inc.
Thanks everybody. Have a great day.
Thanks.